Welcome back, students and scholars. This is video 3 of our ASC 235 series, and today we are moving into practice. You will work through 8 MCQs and 3 short answers, all focused on ASC 235, paragraph logic, disclosure triggers, and practical note writing. Remember, ASC 235 is a disclosure discipline standard. It does not create recognition or measurement rules. It asks whether management has communicated significant accounting policy choices clearly enough for users to understand the financial statements. So today, do not just chase the correct option. Think like a preparer, an auditor, and an exam candidate at the same time. Question 1 asks, what is ASC 235 mainly about? The options are accounting policy disclosures, income tax measurement, lease classification, and debt extinguishment. This is a basic purpose question, but it is also a common trap. Many students see familiar accounting topics and jump too quickly. Here, connect the topic number with the topic purpose. ASC 235 deals with notes to financial statements, and the practice focus is significant accounting policy disclosure. Take a moment, read each option carefully, and lock your answer. The correct answer is A. Accounting Policy Disclosures. ASC 235 focuses on the disclosure of significant accounting policies adopted in preparing financial statements. Option B is incorrect because income tax measurement and recognition belong under ASC 740. Option C is incorrect because lease classification belongs under ASC 842. Option D is incorrect because debt extinguishment belongs under ASC 470. The key point is that ASC 235 is a disclosure standard. It tells entities how and when to communicate significant policy choices. It does not rewrite the measurement rules of other topics. Sometimes ASC is not tricking you. It is simply asking whether you are standing in the right topic. Question 2 asks, which subtopic is in ASC 235? The options are ASC 235-20 Policies, ASC 235-10 Overall, ASC 235-30 Disclosures, and ASC 235-40 Interim. This is a structure question. In the codification, some topics have many subtopics, but ASC 235 is narrow and focused. Think about the official hierarchy: topic, subtopic, section, and paragraph. Only one option here reflects the actual ASC 235 structure. Choose the subtopic that truly exists. The correct answer is B. ASC 235-10 Overall. ASC 235-10 Overall is the one operative subtopic in this topic. Option A is wrong because ASC 235-20 is not listed under ASC 235. Option C is wrong because disclosure guidance is contained within ASC 235-10, not in a separate ASC 235-30 subtopic. Option D is wrong because ASC 235 has no separate 235-40 interim subtopic. Interim logic appears within ASC 235-10-50-2. Memory point: ASC 235 is a focused single subtopic topic. If you see another subtopic number under ASC 235 in an exam option, raise your accounting eyebrow. Question 3 asks, which scope statement is correct? The options say ASC 235 applies only to public entities, excludes non-profit entities, applies to all entities, or applies only to annual reports. This is a scope question and the rule is broad. ASC 235 does not carve out a special class of entities from its policy disclosure requirements within the FASB GAAP reporting framework. Think about entities preparing financial statements in conformity with US GAAP. Which option best captures the scope rule? Choose your answer now. The correct answer is C, applies to all entities. Option A is too narrow because ASC 235 is not public entity only. Option B is incorrect because no non-profit exclusion is stated for entities preparing FASB-based GAAP financial statements. Option D is incorrect because ASC 235 is not limited only to annual reports. Paragraph 50-2 also addresses interim period logic. The scope rule is simple. Within its GAAP reporting scope, ASC 235 has no entity type scope exceptions. Policy disclosure is not a luxury feature reserved for public companies. If significant accounting policies affect user understanding, they need to be communicated. Question 4 asks, what does ASC 235 not replace? The options are accounting policy notes, statement captions, management judgment, and other ASC specific disclosures. This question tests a boundary that students must understand clearly. ASC 235 governs policy level disclosures. It does not eliminate the detailed disclosure requirements that belong to other ASC topics. Think about revenue, leases, goodwill, taxes, and debt. Those topics still have their own disclosure requirements. Select the answer that ASC 235 does not override. The correct answer is D, other ASC specific disclosures. Option A is wrong because accounting policy notes are exactly what ASC 235 covers. Option B is not the central issue because statement captions are different from accounting policy note requirements. Option C is wrong because management judgment continues to apply and is acknowledged through policy selection. The important boundary is this: ASC 235 covers policy level disclosure, but item-specific disclosures remain in their own topics. ASC 606 revenue disclosures, ASC 842 lease disclosures, and ASC 350 goodwill disclosures do not disappear. ASC 235 is not a disclosure vacuum cleaner that pulls every note into one topic. Question 5 asks, which idea best matches ASC 235-10-50-1? The options are, policies must never change, notes replace recognition rules, disclosure is optional, and management selects appropriate methods. This paragraph focuses on management responsibility. Ask yourself, who selects the accounting principles and methods, and what must those methods achieve? The paragraph connects management responsibility, conformity with GAAP, and fair presentation. Review the options and choose the one that captures that logic. The correct answer is D. Management selects appropriate methods. ASC 235-10-50-1 establishes that management is responsible for selecting and applying accounting principles and methods appropriate to the circumstances for fair presentation. Option A is wrong because policies can change when properly justified, disclosed, and accounted for under the relevant guidance, such as ASC 250. Option B is wrong because notes explain recognition and measurement policies, but they do not replace the recognition rules themselves. Option C is wrong because significant accounting policy disclosure is required, not optional. Paragraph 50-1 is the responsibility paragraph. Management chooses, applies, and explains. Question 6 asks, which statement best matches ASC 235-10-50-2? The options deal with omitted basic statements, interim reporting, complete statement sets, and auditor requests. This is one of the most important questions in the practice set because the wording is easy to misread. Paragraph 50-2 says the policy disclosure requirement can apply even when one or more basic financial statements are omitted. It also contains a narrow exception for unaudited interim statements when policies have not changed since the most recent annual statements. Think through that balance before choosing your answer. The correct answer is A. It may apply even if a basic statement is omitted. Option B is too broad because ASC 235 does not say policy disclosures never apply to interim reporting. Option C is wrong because the requirement is not limited to complete financial statement sets. Option D is wrong because the requirement comes from ASC 235 and management's reporting obligations, not from auditor request. The key caution is this: unaudited interim statements may avoid repeating policy notes only when policies have not changed since the last annual statements. If the policy changed, the exception is gone. Interim reporting is not a hiding place for new policies. Question 7 asks, which policy requires disclosure under ASC 235-10-50-3? The options are every immaterial routine detail, a fact already obvious from the statement, a policy with acceptable GAAP alternatives, and only policies chosen by auditors. This is a disclosure trigger question. ASC 235-10-50-3 focuses on significant policies involving acceptable alternatives, industry-specific methods, and unusual or innovative applications of GAAP. Choose the option that represents a meaningful policy choice users need to understand. The correct answer is C. Policy with acceptable GAAP alternatives. Option A is wrong because immaterial routine details are filtered out. Disclosure should not bury users under irrelevant information. Option B is wrong because facts already obvious from the financial statements may not add user value. Option D is wrong because management selects accounting policies, while auditors evaluate whether those policies are appropriate and properly disclosed. The key learning point is that when management chooses one acceptable GAAP method over another, users need to know the choice. Hidden policy choices can make comparisons quietly unfair. Question 8 asks, which is a disclosure technique? The options are revenue deferral, parenthetical explanation, tax basis election, and share split. This is not asking for an accounting result, a tax concept, or an equity transaction. It is asking for a communication technique used in financial reporting. ASC 235 recognizes that information can be communicated through multiple vehicles, including statement phase disclosures and notes. Choose the option that describes a method of presenting information to financial statement users. The correct answer is B. Parenthetical explanation. A parenthetical explanation is a recognized disclosure technique where a short clarifying note appears directly beside a financial statement line item. Option A is wrong because revenue deferral is an accounting result, usually tied to revenue recognition timing. Option C is wrong because a tax basis election is not an ASC 235 communication technique. Option D is wrong because a share split is an equity transaction, not a disclosure technique. The 5 techniques to remember are parenthetical explanations, notes to financial statements, cross-references, valuation allowances, and supporting schedules. In simple words, choose the tool that communicates clearly without making the reader hunt for clues. Now we move to short answer 1. The question asks, why disclose significant accounting policies? Your response should be 3 to 4 formal sentences and should address users, comparability, and fair presentation. Do not write a vague answer like, because transparency is important. That sounds nice, but it is too thin for a serious accounting answer. Explain what users learn from policy notes, how policy disclosure helps compare entities and periods, and how significant policy choices support fair presentation under GAAP. Build your answer like a short professional memo. A strong model answer would say that significant accounting policy notes explain the methods and principles selected by management in preparing the financial statements. They help users understand how reported amounts were derived, including the judgments and assumptions behind key figures. They improve comparability because users can identify when different entities or different periods use different acceptable accounting methods. They also support fair presentation by making significant accounting choices visible to readers, so the financial statements can be evaluated as a complete reporting package. Short answer 2 asks you to compare three disclosure techniques: parenthetical explanation, note disclosure, and cross reference. For each technique, explain what it is and when it is most appropriate. This is not a copy the definition question. It is asking whether you can choose the right communication tool. If the information is short and directly tied to a line item, a parenthetical may work. If the information needs detail, use a note. If information appears in one place but connects to another, use a cross-reference. Think like a preparer who wants the reader to understand quickly and accurately. A strong model answer would explain that a parenthetical explanation is a brief clarification placed directly beside a line item on the face of the financial statement, and it works best when the added information is short and self-contained. A note disclosure is a detailed explanation in the notes section, and it is preferred when the policy requires context, assumptions, or supporting detail that cannot fit on the face of the statement. A cross-reference directs the reader from one statement, line item, or note to related information elsewhere, reducing repetition while keeping the disclosure accessible. The guiding principle is clarity without unnecessary repetition. Good disclosure is not hide and seek. Short answer 3 asks you to draft an inventory policy note. The note should be 2 to 3 formal sentences and should include the valuation basis, the cost method, and professional third-person language. Do not write informal phrases like "the company values inventory properly" or "management uses the usual method." Those phrases do not tell users anything precise. Your answer should look like it could appear in actual published financial statements. Write the valuation basis clearly, name the method explicitly, and keep the wording professional. A professional model answer would say, inventories are stated at the lower of cost and net realizable value. Cost is determined using the first in, first out method. Net realizable value represents the estimated selling price in the ordinary course of business, less the estimated costs necessary to complete and sell the inventories. This answer works because it states the valuation basis, names the cost method, and defines net realizable value in clear financial reporting language. For technical accuracy, treat first in, first out as one of the acceptable cost flow methods, not the only possible method. The policy note should tell users what this entity selected and how inventory is measured. Let us close with the final recap. ASC 235 is a disclosure standard. It does not create new recognition or measurement rules. It requires management to communicate significant accounting policy choices clearly so users can understand, evaluate, and compare reported results. Remember the paragraph map? ASC 235-10 is the one operative subtopic. 50-1 focuses on management responsibility and fair presentation. 50-2 covers timing, omitted statements, and interim logic. 50-3 gives disclosure triggers, and 50-4 gives common policy examples. Also remember the 5 disclosure techniques: parenthetical explanations, notes to financial statements, cross-references, valuation allowances, and supporting schedules. If this practice helped you, please like it, share it with your classmates and colleagues, subscribe to the channel, and support this free education mission. In the next ASC topic, we will continue building US GAAP one standard at a time with the same goal: understand it, remember it, apply it, and score high.